I'm Casper and I'm a Singaporean in my early 30s. Today, I wanted to share more about how taxes are done in Singapore. For most of you who are adults, I'm guessing you guys know roughly how your tax works, things like that. So this video is really more for people who have just graduated, they have started their first job or maybe for the first few years, and they're still wondering about how their taxes are done. So today I wanted to talk about, what is the year of assessment, how is that calculated, how does that relate to your employment income, so on and so forth, and also include some details about tax reliefs and deductions. So if you are self-employed, this video isn't for you. I wanted to make a very specific video that caters to most of Singapore, and most of us are just employees working and letting our companies handle that tax. So if you have your own business, you're doing your own trade, taxes are much more complicated. If you're working for a company that files taxes on your behalf, it makes things easier. As an employee, all your income that comes from your employment is taxable. So that's very clear. If your company does give you some benefits, things like that, sometimes that might be in or out of taxable income. Because you are employed, the company will make their own decisions. They will use tax laws to make that decision for you. They will probably inform you, then file the taxes for you, so you don't have to do any filing yourself. For example, I'm in a company right now that helps us do some investments and gives us some additional money when we invest under that company. This additional money that they have given us is taxable. I will have to pay taxes on that little bit that they top up for us because that is in cash. Example of something that may not be taxable would be insurance. So if I go and see a doctor and they pay for that doctor's visit, that wouldn't be taxable. However, you don't have to pay too much attention to this. You just need to see your tax bill and see how much you earned that year and then how much you have to pay. Other countries, right, you pay tax for that year's income. So in 2023, you will be paying tax for this year's income, the income that you have not made money on yet. In Singapore, it's a bit different. You will be paying tax for last year's income. So that's very clear because in other countries, you have to estimate how much you're going to earn, pay tax on the estimation, and then get refund if you earn less, pay more if you earn more. In Singapore, it's not like that. It's very clear. You're paying for the amount that you actually earned last year. So it's all black and white. Because of that, I do recommend you budgeting your tax for next year's tax bill because you are earning the money now. I talk about that briefly in my budgeting video. So if you're interested, you can have a watch. So I wanted to show you the IRAS website on what reliefs that you may qualify for. So the first thing you want to determine is what is your taxable income. For most of us in Singapore, this would be our employment income here. So you can see there are additional details about what employment income is, but usually this is quite simple and straightforward if you're an employee, because in Singapore, most employers actually file the tax return for you. You may want to take a bit of a check when you get your income, but usually it is quite trustable because they are doing it across the whole company. If you do have your own trade or you're freelancing or you have your own business, it's a bit different, and I will not go into this in this video. I will also not go into all this income that comes from your rent, all this, because I don't have any personal knowledge of this. I don't have any rent, I don't have any taxable dividends, things like that. You don't really need to care for now. So that is how you determine what is the taxable income. Usually it's just filed for you by your employer. The next thing you want to kind of check once you figure out your taxable income, this is what I was talking about with the bad UI. I don't like how this is laid out because you have to click into every single one to learn more about this relief. There should be a table quickly telling you how much the relief is, what the high level requirements are before forcing you to click through. But you might want to just take a look at the names and see if this applies to you. For example, earned income relief here would usually apply to everyone. So everyone below 55 will get $1,000 claimable. Here. So just to be very clear, it's not cash that they take up from your tax. These are the amount that they will take out from your taxable income. So what is your taxable income? Is your full income here, right? Your full income, they will minus off the reliefs from this full income before checking out what your chargeable income is, and then from the chargeable income they will calculate your tax. So this is not pure cash. For those kind of things, right, where the government gives you cash in forms of tax, meaning you don't need to pay tax at all, or they take out from your final tax bill that amount, that is something different. That is actually called a rebates. You can see the rebates here. So there are parenthood tax rebates and personal tax rebates. So for example, if you are a parent, you actually have a rebate. So a rebate is when everything is calculated right down to your tax bill. That's when they minus this off. Okay? And there are a lot of things here. I don't have a child, so I don't know. But for example, if you do have a first child, you get $5,000 off your tax bill until this rebate is completely gone. So you might not have to pay tax for years potentially. Okay, but back to reliefs, because this is our steps, right? Our first step is to figure out our taxable income. The second step is to see the reliefs. You will have to check what reliefs apply to you. Things that I want to point out to you is spouse relief and parent relief. If you have a spouse, if you still have a parent. So for example, if you don't apply for parent relief, you will not get it. This is something that I've been applying to because my parents have both retired to take care of grandchildren. So for example, if your parent lives in your household, they are above 55 years of age and they do not have a annual income more than $4,000, you can get actually $9,000 per dependent. So this $9,000 will be removed from your taxable income to come up with your chargeable income. So this applies to everyone, for example, earned income relief. And I implore you to really check out IRAS's website and see what applies to you here. Knowing the relief that you deserve or you have is really important for you to estimate what happens next year. So this is something that you may want to actually take note of. What I usually do is, because I've been working, I will look at last year's reliefs, what do I get, and then try to apply into my estimation of my next year's tax bill. That's a bit advanced, but that's something you want to keep in mind. So other reliefs that I sort of do would be the SRS relief and also the CPF cash top-up relief, but this really depends on the tax bracket you're in. So let's dive into that next. So after you have your taxable income, you take out all the reliefs here, you take out all the reliefs, all the deductions. So deductions are something different. So some deductions include donations. So if you donate, there will be some deductions here. But just to be clear, no matter how much you donate, right, it will not really help. Your donation will always usually outweigh the tax that you pay. So there is really no tax benefit to donations unless you are already donating and you kind of want to have extra tax benefits. That's when you do donations. So showing you guys my notice of assessment, so it's very clear. First, you will see your taxable income, how much you're earning, how much you earned last year, for example. And then that's where you see the deductions. Deductions include your donations, which is a deduction. You will see the reliefs that you get. And then this is how you actually see. These are things you may want to apply for when the tax filing appears. That's something you want to do. But this is everything that happens after. This is like the summary. So it becomes very clear. You check what's your taxable income. You check what deductions apply to you, including reliefs. And then that's where you come with your chargeable income. And from the chargeable income, you actually do your tax computation based on the tax bracket. So let's go back to your tax bracket. Something that I really want to point out is that personal tax in Singapore is progressive. This means you should never reject a raise. So some people think, oh, I will go into a higher tax bracket because of a raise I get. I have to pay more tax. I don't want that, so I reject the raise. That doesn't make sense, okay? In Singapore, it doesn't make sense. In Singapore, if you get a raise, just accept it. Because no matter what, the more money you get, the more money you actually have. Even if you have to pay more tax on that raise, it doesn't matter because there's still additional money going into your pocket. So let's take a look, right? First 20K, 0. Next 10K, 2. So this is $200. So to simplify everyone's calculation, this is how actually this table works. First 30K is $200. So basically, actually IRAS calculates for you how much you have to pay. So once you see your pay, for example, if you're earning 90K, you will see, oh, first 80K is $3,350. This is the amount you have to pay. On the next 10K left, you have to multiply by 11.5%, and then you will see what your actual tax bill is. Okay, I hope that makes things very clear. You want to see how much you actually earn. Then you see how much is actually your chargeable income. This is not how much you earn. This is your chargeable income. So for example, you earn like $100,000 and then after reliefs, you become 80K. Then you only have to pay this $3,350. So keynotes are just take every raise you get. Second keynote is if you reach a certain tax rate that you don't want to pay, you may want to look into reliefs. So for example, if you're making let's say $86,000, then you're okay with this 7% applied on your second 40K. You accept it because you know it's less than GST, whatever. You're okay with this. You don't need tax relief for this 7%. You might believe that investing will give you more than this 7%, so you go ahead with just paying this 7% without a relief. However, that next 6K that you have on your 86K is actually 11.5%, which is pretty steep. This means for that 6K, you will be paying at least $600. And if that's too much for you, you may want to actually look at the reliefs we talked about. put in that 6k into your CPF. So looking at this relief, you see CPF cash top-up relief, we put in the 6k here, it is under this 8k, the 6%, the 6,000, so you can freely just put in $6,000 into your CPF. That will reduce your chargeable income to 80k, right? So you will never pay tax at 11.5%. This is what you want to do. However, if you are feeling very sensitive to 7%, you can also do your relief at 7%. But I think if you're earning only 40k, you shouldn't be putting any money into your CPF, because 3.5% is pretty manageable. Okay, I hope that makes sense. So before you actually do your reliefs, do your CPF or your SRS, which actually have very heavy conditions to it, I implore you not to do that until you at least you reach more than 40k, where you have 7%. But that's my view. It's really up to you. For me, I'm only doing reliefs when I earn enough to actually be charged at this amount. And remember, this is not your total income, this is your chargeable income. So you want to apply your existing reliefs, such as your parent relief here, making sure you take out your 18k if that applies to you, and seeing if your chargeable income ends up with more than 80k. At the same time, don't just blindly get these reliefs, because all these reliefs have a trap, right? They have a condition. If you put into your CPF, you are not able to take the money out. If you put into your SRS, you need to actually pay money to withdraw it early. So those are some things you want to take note of before you just blindly do it. I hope this little tax video helped you a bit with understanding how Singapore tax works. I know it's a bit of a rambly video. I'm just trying to figure out how best I can deliver this. So if you have any feedback on my content, as long as it's not like, oh, you're so ugly, all this, non-constructive things, please feel free to leave a comment down below and help me out in this journey of creating this content for you. Thank you so much. Bye!